Alright, so this video is just going to be a test run of my next concept here. So what I'm trying to do is to capture or to anticipate a trade setup even before it is presented by the markets. Okay, so basically catching highs or lows of the impulse, or if you want to say distribution. So right now what we have here is ES and NQ on the monthly chart, right? So from the monthly chart, I try to derive any levels here that I think price is going to draw to. So obviously on NQ we have already taken out the previous month's low, so I'm expecting ES to do so as well, right? So for ES, I think it's much clearer. I mean, it has a much clearer draw on liquidity. Therefore, I will be focusing on ES. Heading down into the weekly time frames, I can see that these two lows are probably swing lows on the low time frames. So I'm going to refine my targets to this swing low down here. Adding a fact that we are bearish, we should be wanting to trade towards this level here. Price has expanded above, creating a premium wick, so I don't see any reason to trade back up into this level here, which is above the weekly opening price. This right here is an order block, and as you can see, it is respecting this order block, heading into a higher time frame PD array. Heading down into the lower time frames, you can clearly see that right now we have a daily relative equal lows. I think that is going to be the next draw on liquidity. On the daily candles here, we have this fair value gap, so I'm going to utilize this fair value gap right here. Today is Wednesday. Yesterday was Jerome Powell speaking, which is why we have a smaller range day as compared to the previous 2 days, right? So as you can see, Friday and Monday we had large down close candles, but for this Tuesday candle it was pretty small as compared to the last two. So on Wednesday I am anticipating continuation from the current price action, which is Monday, Tuesday down closing. So I'm going to be bearish on Wednesday as well. Wednesdays tends to be classic buy or classic sell days, so I have a high confluence of where I'm going to enter my positions off from, right? Or the current, or having the underlying bias for the day itself, right? So on Wednesday I'm expecting it to take out Tuesday's high, which would then lead us to trade into the Monday's range. I will be highlighting the Monday's range here, and I'll be looking for a retracement up to maybe 25%. So preferably I would prefer price to stay below 50% of Monday's range for continuation lower, right? So with this in mind, I'll be heading down into the 6 hours time frame. Now before I do that, I'm gonna see if I have any confluencing PD arrays on the left, right? So right now we have this right here. This is a bullish fair value gap or gaps, right? We have volume imbalances, we have liquidity voids, and then we have this fair value gaps here. So this fair value gap was used to send the price higher, right? So I'm going to note down that as well, and it's right in line with the 50% of this daily fair value gap. Okay, having that, I'm going to trade down. I'm going to go down into 6 hours time frame. So on the 6 hours, this high here is basically the daily fair value gap low. On the 6 hours, we do have this fair value gap that is a little bit higher than the daily, so I'm going to annotate that as well, right? So this current fair value gap right here with a liquidity void and the volume imbalance. I think this is due to the contract change. Yeah. So with this in mind, I am anticipating price to be able to trade up into this area here, but at the same time I do not want price to trade above 50%. So right now we have a conflicting analysis. I'm going to trust the daily fair value gap not to fill entirely, to go lower, right? Because we're really close to this draw on liquidity, and I'm expecting a low resistance liquidity run. So having that, I'll be removing this because it doesn't validate my current bias or my current and expectation of the markets. Okay, so now what I'm about to do is to go down even lower to see if there's any levels that I can key off from. Right, so we have this consecutive up close candles on the 4 hours. Right, so this is your bearish order block. So right now, do I want to see price really trade up into this order block here? Personally, I don't want to. Okay, and I'm only focusing on this 4 hours fair value gap. Right, we have not traded into that fair value gap yet. So maybe during London, if it presents any form of opportunity to trade inside this 4 hours fair value gap, I am not going to take it because we are in a bearish order flow. I want to be aligned with the bearish order flow. Make sense? And right now we are currently in the 3rd week of April. So if you just look back the weekly candle, the first week here, down close candle, expansion. Second week, expansion as well. So the 3rd week would be the last highest probability of expansion, because the next week's candle, I'm anticipating at least some sort of retracements back into the monthly range. Okay, now heading back down into the 4 hours time frame here, we do have this fair value gap, but I don't see anything within this fair value gap, so I'm going down even lower. We have this proportion on the block right here. Right, so even though it did not trade up into this last up close candles here, I will be using this as a high probability bearish order block, but yet again it's still above 50%. So I don't like that we have levels that are way overextended with regards to my entry here. Right, so I'm going to look to the left to see if I can find anything. Right, so as of now, there is really nothing that I can key off from, except maybe for this fair value gap here. Let me take a look at the low, and then maybe this volume imbalance here, right, because it was used to send the price lower before. Okay, so I'm gonna look to the right and then take a look at where the levels are. Okay, so this level here is below this volume imbalance here, is below this consequent encroachment here, right? But still doesn't tell me anything. Didn't even give me a short-term high above this daily fair value gap. So I'm going down lower to the 30 minutes. Right, so 30 minutes, same thing here. I don't have anything that I can key off from. To the left, let's take a look. Right, so nothing on the left as well, but we do have this fair value gap here, this CB here, right? As you can see, was previously used as resistance, and then the close up above came back down, support, and then higher prices. So I'll be narrowing down into this fair value gap here. Okay, I'll be removing this, because for this candle basically trades down into this inversion fair value gap, if you can see right here, right? Consequent encroachment. So I'm gonna leave this here just in case I might need to use it later on, right? So right here, I would have my initial invalidation here. So this right here would be soft invalidation. Right, so moving on all the way back into the right. Levels that I would really love to key off from would be right here. Okay, as of now, right? Let's take a look at the 15 minutes. Right, we have a swing high right here, so this would be my hard invalidation. And then let's take a look at the left. Right, we can refine it further. Right, 15 minutes right here, this fair value gap right here. Okay, it was used to kickstart the low, the impulse or the distribution, if you want to call it. Right, so this was the last high into this fair value gap that was used to send the price low. So to me, this is a high probability fair value gap. As you can see right here, price came right back down into this fair value gap coupled with this order block right here. Okay, so I think this is an area that I can utilize effectively, and it lines up within the consequent encroachment here. So how am I going to approach this? Okay, let's measure our risk to reward. Right, so my hard invalidation will be here. Risk to reward, I'm looking for this low here. This is about 2.5. right? So because it's 2.5, it's not 3, right? I'm a little bit hesitant to take it, right? Unless I can, draw it all the way down until I reach 3. And what levels would this provide me with? Let's take a look. Let's start off with the higher time frames. That would be this last down close candle on the daily, right? And let's use the weekly projections. So the weekly projections, how would I usually do it? Anchoring the high to the opening price. This would be my manipulation. I'll be projecting out to see if to see if it aligns with the -2 to 2.5. So the safest bet is right here, right? This is the first draw on liquidity. This is the safest I can go. And let's take a look. It can reach down here. That's the maximum. But if you take a look at the monthly manipulation, it's not that big, right? So April's opening, this is the only manipulation that we have. It's not that big of a manipulation. Therefore, I would be looking for best case scenario low hanging fruits. Okay, I'm not too keen into trading all the way down here, right? Because if you can see, during the month of January, we have a large manipulation. This is January's low into January's open right here. This is a large manipulation, right? So if you anchor this fib from this low to this monthly candle here, we closed January around here, right? 1 to 1.5. So as of now, if you take this high to this low, we're way beyond the projection levels. And if I were to really force it, let me just use this last manipulation leg, right? We are around 2 to 2.5. So this is like a retracement zone. And if it really wants to reach lower, it's pretty much in line with the expectations here. Okay, as you can see, the sample size is pretty much aligning the same place for reversals. So if you were to ask me whether I would like to take this and then trade it all the way down into this floor, personally I would say no, right? But is it possible? Yes, it is. Okay, so as you can see, this January's open is also the 3 months open, right? So the quarterly candles opening price. So this low with this high here quarterly, right? As you can see, we have reached all the objectives by the end of March. So this is April's opening price, and by the end of March we hit this target here, right? So it continued higher, and this candle here closing above 2.5 basically says that okay, it's going to attack -4, which we got right here. So during -4 we anticipate reversals back into the range of this impulse here, which would be 50%. So 50% of this range here, that's going to be, let's see, grading right around here, and you're going to be looking for liquidities, right? Basically swing lows below 50%, and the nearest one is right here. So eventually I think we can reach into this area here, but because I'm not trying to hold many days of trades, right, for my prop accounts. So is this possible to be reached by the end of this week? I don't really think so, but can it do so? There is a possibility, right? So I'm just minimizing choppy price action here. Okay, so my terminus is right here, this swing low, and until we get to this swing low, every day I'll be looking for shorts. So that is how I'm going to frame my bias for the rest of the month and up till May if possible, right? So this is like what ICT calls it, the quarterly shift. So right now, with all these details that I have, all this data that I have, I am going to look for a short-term trade, right? Because we are in Wednesday, price has been going down for 2 days, and with that in mind, we do have a high impact news on Thursday. So Wednesday could just be like a continued consolidation, right, heading into Thursday, and then from Thursday and Friday we get the last leg lower. So that could be possible as well, which is why I want to be really cautious when I'm trying to short on Wednesday. So with this, right, let me log into that paper trading account to sort of simulate. Oh, what? Oh, this is the position trading thing. Okay, never mind. Let's take a look at the other one. Right, so this is the YouTube one. Right, so paper trading account, I'm going to try to simulate what I'm going to do for my prop accounts. Okay, now my best entries, I think it's right here, and my validation would be right here. Okay, so I'm going to put a limit order here. Right, I'm just going to use maximum 2 2 contracts here, right, so that I can take partials. Right, my draw on liquidity would be here, 3R, slightly below the daily fair value gap. So this is the invalidation here, not invalidation but the target here, and I'll be taking everything out, not everything out, be taking 1 contract out down here. So my initial take profits will be right here. This is the target 1 monthly fair value gap. Okay, so target 1 right here, but I can't set that now. I have to wait until my orders are filled before I can do that, right? So 2 contracts, I'll be risking 2009 with account balance of 103. So how much risk is that actually? 2.5% risk, right? So as you can see right here, this soft invalidation that I've annotated, this is going to be like a gauge, so I'm going to use this as a gauge, right? If price ever close all the way through the daily fair value gap, this daily fair value gap will in turn become a low probability fair value gap, and when that happens, I will look to cut my position, right? Rather than waiting for this hard invalidation right here, right? This terminus invalidation, or I don't know how would you call it, but true invalidation, yeah, maybe that would be a good term, right? So true invalidation right here, soft invalidation right here, my entry is right here, somewhere around the consequent encroachment of the daily fair value gap. And then my targets would be, initial target number 1 would be the monthly fair value gap, and then terminus would be 3R basically. Okay, so that's how I'm going to play it, right? And I think by New York I should have a fill, right? And then we'll see if this trade can play out by the end of lunch, or not end of lunch, by the start of lunch, which means 12 noon. So 12 noon would be my, what do you call it, cut loss time. Okay, it's because I would prefer everything to be completed by 12 noon, and if we don't have that, then obviously we might want to trade higher or what, I don't know, depending on the price, the market structure at that point of time. So I'm just going to leave it here. I'm going to come back later during the New York session to review what has happened. Okay, just keep in mind that when I cut my losses below the validation here, I'm not going to post anything or what, right? I'm just going to wait till London. Not London, I'm just going to wait till New York. And if I do cut the trade here, like before it hits the true validation, you will know by during New York or by New York, right? I'm just going to do an update on that. So with that said, that's it for this session here, right? And I hope you enjoyed this. This is how I would like, or I would prefer my trades to be. Okay, and thanks for watching. I'll see you again in New York session if life doesn't get in the way, right? And talk to you again.